Good afternoon, everyone. Can I get a quick mic check, please?
Yeah, hi. This is Larry.
All right, great. Well, thank you so much for joining us this afternoon. Welcome to the Trading Pub. We are so happy that you all are here. We have a very special guest speaker for you today. First, I'd like to tell you a little bit about the Trading Pub. The mission of the Trading Pub is to provide a place for our patrons where they can hang out with some of the top traders in the industry. The pub is the place to receive trading education on stocks, futures, options, and Forex, all while interacting with traders and investors who are just like you, and we do all this for free. 10% of any revenues we generate are donated to charity, so if you would like to know how you can help with that, please contact us. I'm going to put an email in here real quick. There you go. And also, after the presentation, feel free to take a look at our website and see some of the projects we're currently working on at the pub. I'm sure you'd like to know about those. And at this time, I would like to introduce our special guest, LarryGaines of Power Cycle Trading. Larry trades options and futures and is the founder and CEO of Power Cycle Trading, which is an options, futures, e-mini, and Forex day trading site, which he established so he could share his years of trading knowledge and experience to teach its members how to achieve higher trading profit margins with smaller capital investments using options and futures. So now at this time, Larry, the room is all yours.
Thank you very much, and I appreciate everybody showing up here today. So let's get started. I've got quite a bit to cover. First off, I'd like to put up my disclaimer, and this webinar is purely for education purposes only, and any stocks or futures or other recommendations are not to be construed as advice and should not be construed as recommendations. So with that being said, let's get moving forward. One thing I'd also like to show you is if you're interested in this, go to powercycletrading.com. That's my website, and just put in your name, email address, and you'll get my top 15 option trading strategies. So let me get that for you real quick, and I can put that in a just cut and paste it just for a second here. Let's see here. Make it easier for you. So there's the URL right there. So yeah, go there and you'll get my 15 option trading strategies there for your use. It's a really great ebook. I think you'll enjoy it. And I'm going to do one more thing here. Okay, so let's get started here. The other thing too, I'm having a special trader special for you everybody that's here today, and if you'd like to take advantage of this, I'll go over it in more detail towards the end or at the end of the presentation. But if you have to break loose here, you'll basically get any choice of my power courses. You'll get option trading made simple. My daily aftermarket outlook report comes out every day. That's for 1 month for free. In my virtual trading room, you get that for 1 month. So the total value of all this is $1,193. And today, if you'd like it, you can get it for $597. So to take advantage of it, if you do have to take off early, just go to powercycletrading.com/trading, and you just put that in, and you can find out all the details about this particular offer. And I'll go into a little bit more of it towards the end. So this is the URL right there. Okay, so today I'm going to go over 5 essential power cycle trading tools, how to let your winning trades come to you, how to capitalize on powerful trend breakouts, my favorite trading tools, which will be futures, weekly options, and why, how to get significantly higher returns using less capital, and a secret trading weapon that I've been using for a long time. So who is power cycle trading? Well, I've been trading and brokering commodities and financial markets for over 30 years. I began my trading career trading futures in the early 1980s and trading cargoes of crude oil. And back in the early 80s, I started trading crude oil options, option contracts on crude, and traded millions of barrels of these crude oil options. For over 10 years, I managed the International Oil Trading and Marketing Group for a company called Transworld Oil in Bermuda, and we were one of the largest oil trading companies in the world. My group traded billions of dollars worth of foreign exchange and financial market derivatives, and it was not uncommon for us to trade over $1 billion worth of commodity derivatives in a single day. So that's where I got my start in trading and learned a lot of what I know today. During this 30 years of professional trading, I learned many different techniques that were not commonly known or used by individual traders, and this led me to develop a simple yet highly accurate trading system. It's a price cycle system that individual traders can easily learn and use, which helps to level the playing field with, the Wall Street pros. The power cycle trading model gives traders or investors the ability to recognize and capitalize on the beginning of a trend rather than getting in at the end. I founded Options on the Open, the virtual trading room, so individuals could improve their trading skills and live in a live trading environment, much like what I had and experienced during my professional trading career. We always had, trading groups and trading desks and offices all over the world, so it was an interchange of information between traders, and that really provides you with strategies, ideas, and just, someone else to bounce ideas off of. And so after members had asked me to teach them how to trade futures, we incorporated futures and became a more comprehensive trading service, hence power cycle trading. So let's get started on this journey to becoming a successful trader. First off, how to capitalize on powerful trend breakouts. I'm going to go through today with one really easy to use technique for pinpointing and identifying breakouts, and this is something that we've incorporated with our trading system at Power Cycle Trading. And I'm going to go through a lot of different examples and show you how to do this, and it's a very mechanical way which you can start incorporating in your trading tomorrow. So what we've done with our cycle models, we've incorporated moving averages and trend lines for breakout trades and trade management. So trend lines, it's a simple strategy when used correctly. And what we've done is we will manually put these in, or if you use Thinkorswim, we can use our model across multiple different platforms. But with Thinkorswim, we've got the model fairly automated, so we can draw these trend lines automatically. So it's part of the model. But I'm going to show you how to draw them, and perhaps whatever platform you have, you can just do this automatically yourself as well. So what you want to do with the trend line, supply and demand dictate price movement and the use of a trend line. Trend lines are universally used, but the construction of them can be very dissimilar from one person to the next, causing for a very subjective type interpretation. Now, the difficulty when creating these lines involves the specific points that you choose to select and which you connect the dots, or your data points. Human nature often interferes in the proper construction of these lines. We are accustomed to review historical price activity of a market from the past to present, with dates reading from left to right. And as a result, the demand and supply lines of a trend line are drawn and extended from the left side of your chart to the right. Now, intuitively, this is incorrect. Recent price activity is more significant than historical movement. So precision and accuracy demand that the lines be extended from right to left, with the most recent date appearing at the right side of the chart. And I'm going to go through a lot of examples to illustrate this. So first off, we're going to go through a supply trend line. This is a declining price movement as defined by a downsloping supply line, as well as a pattern of both lower price highs and lows. The supply pivot point is where there is a price high that is not exceeded by the prior price or the price immediately after. This is what we call a pivot high. So here's the first example, and this can be used with any time frames. I don't know how much you guys have used trend lines, but we're very keen on them, and they really help us to define breakouts and momentum. So this is just an Apple 5-minute chart, and what I'm going to show you is the basics of this construction. So let me just get a pointer here. So the first thing is you want to go, like I mentioned earlier, you want to go from the right side of your chart for most recent price in rather than from historic price. So we're going to go here, just for a simple example, we're going to start up here from the right side of the chart here, and we're going to look for the first pivot high. So this point here is the first pivot high. That point is higher than the bar before, higher than the bar after. So then you go up to the next. So you're going to go to your left looking for the next price, an older price bar. And here's your next pivot high right here. So it's higher than the one before, higher than the one after. So then you just extend your line up, draw it down, and you've got a perfect trend line, supply trend line. So now you can play the breakout. So this is currently, these arrows are actually where our system or cycle model actually went long. And so when I see our trend lines that are drawn in and I have a cycle model buy signal, I'm really aggressive on these type of setups because you get some tremendous momentum breakout, as you can see here. So that's one example, and that's just on a 5-minute chart for an intraday trade. So let's go to the next chart. So the next one is just on a gold chart. This is the daily chart, and so this shows you on a daily basis using the same trend line mechanism, very mechanical. Take your pivot high point right there, so it's higher than the one before, higher than the one after, and then extend up to the left of your chart going to the next price. So always start with the most current price. See, here it would not be a pivot high because that bar's higher. This bar would not be a pivot high because that bar's higher. So it's a very defined process to do it, and you can code your whatever platform. A lot of them will let you do this, and you can code it and you can automatically draw these. So here's your pivot high, extend the line down, perfect supply line, descending trend line. And here again was our cycle model, just to show you how it a lot of times correlates with these trend line breakouts right before the break. So our cycle model had a buy signal here. I saw a trend line here. I'm very aggressive or very interested in this breakout, knowing that I have potential for some big price movement and momentum. Here's another example. This is Amazon on a 60-minute time frame. I call this an intermediate term time frame. And this is what we will use for swing trades. I'll use the intermediate time frame, 60 minutes, 45 minutes, along with the daily. And here again is here's a pivot high right there. Here's a pivot high here, pivot high there. Connect your line there. And here again, our system went long. I saw a trend line, excited to get into a trade with potential for big momentum. And you can see how it exploded through that trend line. So we're constantly doing this all day, in our day trading. And this is also the way I go about, lining up my swing trades. That's part of it. That's not all of it, but this is just part of the mechanism. Here's another example. Here's Apple on a 400 tick. So we use tick charts, for our intraday trading as well. And here's a pivot high right there. Pivot high here. Again, our system went long here. Saw a trend line there. Nice breakout to the upside. So the next one we'll do is the demand line. And this will be, pretty much the opposite. So the demand pivot point is when there is a lower price that is lower than the prior price and the price immediately after. And we call this the pivot low. So again, lining up your chart, you want to go from right to left to find the first point rather than from historic price or older prices. So here's the first pivot low. So it's lower than the bar before, lower than the bar after. So here's your pivot low. If you saw that, see that pivot low there? Well, it's not lower than this bar, so you can't use that. So this is a rule-based way to draw your system or draw the trend line, which becomes then a system. So here's your trend line. Here's your next pivot low down here. So take it, extend it all the way down, draw your trend line up, extend it. You've got the perfect demand trend line. Again, here's our system, gave us a signal to go short. I see a trend line here. This is on a 5-minute. This is a great intraday trade setup. I go short on the break of the trend line. I usually will give it a little bit of extra room because, from trading experience, you know that a lot of times when you come down to your first break of any type of major support or resistance, it usually bounces. So what I'll tend to do, the system had a sell short signal right up in here, but a lot of times to really get a good entry so I don't get bounced back up, you can see here this bar here, see how it broke and this tail extended up there. So what I'll usually do is I'll set I'll look for a lower price area as well. So like in here, see this price, these prices right through here. So what I'll do instead of, selling it short the first time, as long as there's, no big support level below, I'll wait for it to break, say, a prior type of low and then short it, rather than, getting in too early and having a bounce back where, you get stopped out. If you have your stops in, you could short something on a trend break or a support break and then, it pops back up. So I will usually give it a little distance. And what I do is I will look to make sure there's no other major like moving averages or major other support levels down here. So if you've got all this room, I call this kind of open prairie. So if you have a lot of room below, then I can afford to give it a little bit more clearance when I'm taking a short or taking a long from a support or resistance level. So that's just something that you might want to look at. It's helped me a lot to avoid getting in something prematurely and then getting stopped out. Here's another example. Let's see here. Yeah, okay, here's another example. This one again is Apple. This is a 400 tick chart. So here's your pivot low here. Here's another pivot low. Extend your line up. Break the trend line. So again, here what I'd be looking for is to give it a little space. So I'd be looking at like these lows right in here. So let it break that low there, and then put your short on. So if you shorted it right on the break, sometimes it'll pop back up. So this will a lot of times keep you from getting stopped out if you have your stops set fairly tight, and keep you from having any equity against you. So if you do that, you usually catch it perfectly. It's just a waterfall down or something like that. And here's another pivot low there. Pivot low here. So again, look for kind of a prior low area that was support. So you see your trend line break. We had an actual short signal with our system. So I'll look for this area to break, and then I'm going to go short like right in here. So, work with that, paper trade it, but, when you use your trend lines, remember this is a little rule that I'm just going to throw out to you just from experience. Okay, so my two favorite trading tools, well, we use futures and options, primarily weekly options. So I'm going to go through a lot of detail about how we use these to benefit our trading. First off, I'm not going to spend a whole lot of time on the benefits of futures. Probably a lot of you already know a lot about futures and maybe less about weekly options. So I'll plan a little bit more time around the weekly options. So the significant benefits, though, of futures, they have a good tax benefit. You've got a 60-40 rule, which is a whole course in itself. Lower margin rates, low commissions, very liquid, huge volume, great transparency, near 24-hour trading, great for hedging, and really good for portfolio diversification, and lower risk than stocks because you don't have, or you reduce yourself on that overnight gap risk since you can trade pretty much 24 hours. So these are some great benefits for trading futures. And a lot of times the pre-market can offer some great opportunities as well. Especially, we do a lot of what we call volatility squeeze type trade setups. In our system, we have can identify these volatility squeeze. So when the volatility pulls in, we're looking for a potential breakout up or down. And these can work really great with futures, because if you look at futures, coming into the U.S. Open, a lot of times they'll trade a very narrow range where the volatility decreases. And then when you come into the U.S. Open, say at 6:30 Central, 7:30 Central, you can see a pretty big explosion to the upside or downside. So take a look at that on your charts, after this presentation or tomorrow, and this is a way that you can find some great trade setups using trend lines. And also, if you are interested in our system, we have what we incorporate our volatility squeeze indicators, and we have a really nice system for that. So the other great plus to futures is margin. I mean, you can get margin rates as low as $400 for E-mini futures on the S&P, $500 for the NASDAQ. So, if you make $50 a contract on a trade, that's 10%, or $40, it's 10%. So, you have a potential for some good capital return on your cost of capital for day trades, or even longer trades, when you look at the margin cost versus, the outright shares of something, or the outright full nominal value of a futures. So now I'm going to go through trading benefits of weekly options. Basically, weeklies are very cheap relative to every other type of contract. Since expiration is within days and often hours, you can purchase at-the-money weeklies for as little as $5 or $10 or even $2. I mean, they can be very cheap. And this is primarily will be on your expiration day. They have unlimited profit potential. They can move 500, 800, 1,000% or more on a regular basis. And you contrast that with options. You don't get these type of returns on your capital using a regular monthly type option. Weeklies are easily traded securities. They trade like stocks. They have their price. They move. They go up and down. They're very liquid. They're easy to get in and out of. And they give you 333% more low risk income potential trade setups. Weeklies, since you have 52 times a year you can take advantage of the weeklies, they give you that many more opportunities for various non-directional and directional income type strategies, 40 more than your regular monthly type options. Weeklies, are for everyone, not just the pros. Options have managed to get a bad reputation over the years, despite being used by practically every professional investor out there. And this is primarily because of the educational aspects of it. Options a lot of times people think they're too difficult and complex, that you traders are simply overwhelmed and they don't think it's going to be easy enough for them to learn it. I've developed a way to teach options, which I call the practical way of trading options. And this really boils down to the focus on the option delta and market timing. So those are the kind of the two components that we use just for selecting what strike we want to trade, for the options that we're trading. Market timing is the single most important factor, in my opinion, in assessing a stock's likely price movement. Traders will realize the importance of market timing, but a lot of times you just don't have, the right tools or what you need to get the information quickly and accurately. And I'll kid our members that we have an almost unfair advantage many times because we have both a high probability trading system and the knowledge of how to use and take advantage of weekly options. So this, gives us a great advantage. When day trading or swing trading stocks, the first thing I will look at are the weekly options, and their benefits are just exceptional. And one of the big ones is leverage and extremely low cost. So I'm going to give you some examples here of the type of return on capital you can get, so you can visualize and actually see trades and see how it works. So these are just, I'm going to give you several different days of trades that we've done that I called out to our trading room and took. And so, but first off, the performance tables below, they illustrate just the returns on these weeklies, but these are unaudited and there's no guarantee of future results. And remember that one option contract represents 100 shares of stock. So what you're seeing here is based on like one option contract. So this was November 2nd. These were mostly Apple is one of the best weekly options to trade because it has a great trading range each and every day, anywhere from 10 to 15 to $20. Very good liquidity, pretty tight bid offer spread. So it's primarily the one that we will use, and it's like trading futures. I mean, it's just been commoditized so much, and there's so much liquidity. So pretty much all the weekly options that we do will be on Apple. And so these were, November weeklies, and you can see here, here you can see $25 a contract, $40 a contract, $40, $20, $20, $100, $30. So, various ranges of profit. But when you look at the cost of your capital, for example, this 365 represents, you multiply that times 100 because one option contract is equivalent to 100 shares. So the cost here was $365 for one contract. I sold it at $390, and these trades take minutes. They can be very fast. So I made $25. Well, 25, over the cost of my capital, 365 bucks is 6.8% return. Here's, this was a sold puts right here. So return on my risk was 20 bucks. I made 20 bucks on that selling the puts. That's over 28% return. Here I bought the Apple 595 puts to go short, paid $600 contract, sold it at $700 contract, made $100. So that's over 16% return. So when you look at all the cumulative returns, when you add all these together, 33, 16, 15, 28, you get a return of over 114%. And this is in one day, and this is in the first usually hour of trading, on most of these trades. And that was a cumulative profit of $275 per contract. So, if you do, that's one contract, and you can do the math and figure out if you do 2 or 3 or 4, how it adds up. Here's just another day to show you an example. This was on October 26th. I just had these put together, so I'm just using them. But here's a trade, made $120 a contract. That's over 22%. So your cost was $535 a contract. I sold at $655. I made $120 a contract, over 22% on my capital. Here's one sold puts. Went short at $130 a contract, covered it back on 102, $28. Cost your return on your at risk is 27%. So here a cumulative return of 82% and a cumulative profit of 313. Here's one more example. This again was in October. These were calls and puts, various, playing it just up and down, going long, going short, going long. Here's a trade, bought the puts to go short, paid $440 a contract, sold it out at $545. This took a few minutes, made $105, over 23%. So cumulative over 50% there. So it gives you an idea of, the impact that it can have. And these are just the trades based on our system of that last table. So here was the short. You can see, if you look at the, rather than, and I'll go through some more examples here too, to show you. But if you look here, if you'd shorted the shares, it was around $640 right there. So instead of, going short the shares, I bought puts. I think this was the one I made $105 on, and covered it right down here at $637. So that's a $3 move right there. And, depending on your option delta, that'll tell you or determine how much you'll make on that equivalent move on your option. So I made, a little over $100. I think I had maybe a 40 delta. I probably got out, I got out right here, and I made over $105, I think it was. Here was a long at around 638.50, and then got out here. Apple was up at over 641. Instead of buying the shares, I bought the weekly options, and boom. Here was a short, went neutral. Here was a short, went neutral. So that's it. I mean, it's, if you have a good system and then you can use the weeklies instead of these shares, you can get these big returns. And weekly options now account for nearly 12% of the 300 plus million option contracts traded every day. Weeklies are still a relatively new contract, but should not be overlooked, for they offer huge trading benefits. If you know how to use them, then they're a great benefit to take advantage of. For some of the more exciting stocks, we'll usually trade Apple. Sometimes we'll jump into Google, but primarily Apple. But Google can offer some great opportunities, and there are others as well. And they make up 40% of most of the option contracts traded. The weeklies come out every Thursday, and then they expire the next week on a Friday, so 8 days later. And so now I'm going to go through some of just the other basics of the weeklies, just to give you an overview of how to use them. So if you know how to price options, it basically comes down to this. The value of an option is determined by its time value times the implied volatility of the option times its intrinsic value. So by using weekly options for day trading and swing trading, we've been able to better utilize their benefits, and those benefits that can also enhance your trade other than just the direction is your time decay, if you can use that to benefit the trade, the volatility, and the option delta. And this really creates a forceful kind of triple win trading formula to use. And then by combining our directional price cycle and breakout system, we've created a really great high probability trading methodology to use. So here's the basics of one component, which is time decay, and it's accelerated since you only have 8 days to expiration. So it comes out on a Thursday, expires on a Friday, the 8 days later. So your first day, you've got 100% time in that particular option, and then each day that option decreases by 1/8. An eighth in the value decrease each day. So that's roughly over 12%. So if you do nothing and just hold that option, every day it's going to go down in value 1/8 every day if nothing else happens. So to take advantage of time decay, it's great for directional trading intraday because each day the options get cheaper and cheaper and cheaper and cheaper because of time decay. Here's a table to illustrate this point. So here's Thursday. You've got time value. I set it at 1. Implied volatility, I just plugged in 300% or 300. And I kept intrinsic value at 1 all the way down so you can see the relationship here. So the first day, 1 times 300 times 1. The premium or the value of that option would be $300. The next day, it's decreased in value by 1/8. Same, keep everything constant. So it's gone down to 262. So you lost almost $40 over one day. Next day, 0.75. Keep losing. Here you can see it's the time value on Monday is down to 50%, and I spiked the volatility to 800. Intrinsic the same. You can see your value didn't increase hardly at all, even with the big spike on volatility. So it's all comes down to that formula, time value times implied, and you're fighting against time value if you're trying to go long overnight on these weeklies. So, the other way to do it is you have to either short it if you're going to stay with the trade overnight. So there are a lot of strategies that involve that, or you take your longs during the day and close them out. So here's another illustration just to show you that a little bit better on an option chain. So we'll just look at the 640 strike right here. That's the 640 strike. You can see this is the bid and the ask. These are calls on this side. It's calls right here. The other side is puts for the option chain. So we're going to we usually trade around a 50 delta, something like that. So that's kind of at the money. So Apple at the time was trading around $632. So 640 strike, that's 5 at 505. So that means $500 bid, 505, 505 ask. So you could buy that 640 strike at, say, $500. Now going down here, taking the same strike, 640, has roughly the same delta. And this is a monthly option. Apple's trading at the same price. This is the monthly. You can see it's double the cost. It's 1,050 at 1,060. So you can see it's double the cost. That's the monthly time frame. Now here's a table to illustrate it a little bit more for you. So here is, again, same example. Here's Apple. So it's trading, let's say, around $640 a share. We use 100 shares just to make it equivalent to one contract of an option. So to buy 100 shares of Apple at that point in time was relative, it was $64,000. Apple will run in, spurts of $1 to $3 at a time, and it moves. So it's not uncommon that you'll make $1 a share, which would be $100 on this example, but that's less than 1%. That's 0.16%. So 1/10 of, 1.01.6%. So you can see how low your return is on your capital costs, which is so extremely high. $100 is not bad, but return on your cost of capital is not great. Now, if you take the same example, though, and you go down and you buy the weekly option with a 50 delta, that contract cost $500, which we saw from that option table, that chain that I showed you before. If you made $100 on this trade, that's a 20% return. So 100 divided by 500 is 20%. Now, if you had a 50 delta here and the stock goes up $100 with the 50 delta, you would have made $50, but you still would have made 10% on the cost of your capital versus 0.16%. So that's the weekly. Here's the monthly, so you can see the difference here. And this had like 12 days to expiration. This was 5. So here's the same situation here. This option, the 640 strike, would cost $1,050. If you made $100, that's 9.52. If you had that 50 delta, took it off, made $50 a contract, that's 4.76. So, it's more than half, on this particular example. So you can see how the power of that weekly option can work in your favor. Now here's another example. This is what we call an advanced directional strategy. This is a leverage at an extreme low cost trade. In this example, will be on Netflix, and this is on a day trade on Friday expiration, so the day that the options actually expire. And this is what sometimes you can see happen. So again, just to illustrate this, what we'll look for, we have a methodology that we use. We're looking for things that can have a breakout on the expiration day. So there are a couple of different ways to do that. You can look. You want to look for things maybe that are maybe oversold, that maybe could have a short squeeze, or maybe they're oversold. They could have a breakout to the upside. We call this pinning, and I teach this in our at Paracycle Trading, how to analyze pinning of a stock. And so we're looking for type of breakouts. So the one thing that we will look is for, where the options potentially will pin. We're looking for breakout opportunities. On this particular example, Netflix, we had a buy signal on the daily on 16th of March. So that was a potential there. And then, you can see there was a pivot high there, pivot high. We had a potential trend line breakout, and it did break out. So instead of buying the shares, you buy the weekly options that expire on Friday. And I'm going to show you what that would have looked like. Here again, just another illustration. Here's a 30-minute time frame. Our system went long, so this looked like a good potential. Pivot high, trend line break, boom, to the upside. So instead of buying the shares, which, if you go back to this example, if you bought here, about, say you got in at 109, it went up to 114 or 15. So, that's a nice move. It's like, what is it, $6 a share, or $600 for, if you had 100 shares, to make it equivalent to an option. So that's a great move. But if you'd done the weeklies, this is what could have, this is what you could have had if you'd done weeklies and known how to take advantage of it. At the same time, rather than buying the shares on the 16th of March, you could have looked at the Friday expiration, those options expiring that day, the 110 calls. You can see back there on my example, it was from around 109, 110, and then it blew to the upside. So the 110 strike, these were going for 11 cents, or $11 per contract. So you buy those instead of the shares. So you buy the 110 calls at $11. It went up as high as 174, closed at 127. So your net gain is $127 less your cost of 11. So you made $116 per contract. That divided by your cost of capital, which is $11, is over 1,000% return. So that's an illustration of how this works. You might hear people say, I made 1,000% or 100% or 50% or 10%, and you think, there's no way, you're crazy. But I mean, this is the way it works. So here's another chart example. This is a 10-minute chart of Netflix just to show you the price movement, and next to it is a 10-minute chart of the actual 110 calls, the strike. So you can see here, it's 11 cents, see, 10 cents. It even got lower. Well, this was expiration, but right here at around 9 and 10 o'clock, it was down to 10 cents. And then you could bought for a long time at 20 cents, which is $20 a contract, and then exploded to the upside, went up to $176, and then came back down here. And the option where we got out was like 127. So that just illustrates the potential here. Instead of buying at 108 or 109, you could have bought at $20 or $11, and boom, it's another way to play it. Plus, you've minimized your risk because you know that the most you can lose is $11 or $20. So instead of having a price at $108 a share, it's easier to define your risk by premium paid. If it's only 11, it's a little bit easier. So that's another great attribute of these things. So in summary, the ability to make money with lower risk, lower capital requirements, short time frame, higher profits, higher return on capital, and weekly trading opportunities. So the next thing I'm going to go through is 5 steps to letting winning trades come to you. And first off, you want to treat your trading as a business. So, you need to have a plan. So have a plan that governs all your actions. You want to be disciplined at implementing that plan. You want to learn to be patient, to patiently wait for the highest probability trades based on whatever your trading model is or your trading methodology. You want to allow the trades to come to you instead of chasing trades. So if you miss a trade, don't chase it. Sometimes I will, but it has to have great momentum. But most of the time, you need to wait for the trades to come to you and be ready then. Create structure in your trading, set goals, rules, time frames, work hours, and risk control. So make it a business. Now, these are all simple guidelines, but sometimes the simplest things are the most difficult to put into action. So if you're trading a model, it becomes a little bit easier because your rules are clearly defined, making it easier to implement, your trading rules and your discipline. So we use the power cycle trading model, and it's rule-based, and our model is actually based around 4 powerful indicators, and we look for these indicators will define a price range, price volatility, change in price cycle, change in price momentum. And this combination with our cycle model and the momentum breakout using trend lines and moving averages has allowed us to have really consistent trades and use a guideline and rules to help us trade. So we're very disciplined with our trading methodology using this system. We also incorporate 2 to 4 different time frames for each trade, set up and trigger entry, and this allows us what we call our trade confirming process, and this also allows for non-emotional type trading. So it's very disciplined. So you end up with these 5 elements in your trading to make decisions based on your model you're using, and it takes away making decisions based on emotion of fear and greed that can often sabotage any trader, leading you to overtrade and give back your profits. I mean, we've all been there. I know I have. So again, we trade a lot of Apple weeklies, but we also trade a lot of futures, NASDAQ futures, gold futures. Different members like to trade different things, but I just wanted to show you the correlation of this is an Apple weekly chart, and this is the NASDAQ 100 futures. So you can see how correlated it is. So, we were trading a lot of weekly options, and then we said, okay, hey, let's just also trade the NASDAQ 100 futures. And so we have a lot of people that like to do that. So now the last thing I want to show you is my secret weapon, and all that really is what I call top-down market analysis, and this is top-down market technical analysis. Back when I started out trading and running a trading group for over 10 years, we didn't have a lot of technical analysis, so we used fundamental analysis. And we would start, though, with a top-down market fundamental analysis. We'd look to see what the macro picture was on the fundamentals. Then we'd look for, break it down from macro, long-term, medium, intermediate, short-term. We'd break it all the way down and have it systematized, and then we can develop a investment trading type plan. So this method of analysis allows a trader or an investor to analyze the market from the macro big picture all the way down to the short term or intraday. And what this does, we use our cycle model, but you can use whatever your system is, you use that and implement it to a top-down market analysis. But I do this using our power cycle trading model. It works really great, and I'll show you just in a minute how that has turned out. So once this new cycle trend is identified, then as an investor or trader, you can plan on how to allocate your capital. If in a macro uptrend or a long-term trend is occurring, you would probably want to be more aggressive in buying market dips and holding for greater returns. If the macro trend is down, such as we're very close to a macro downtrend now, and the end of this month will confirm that, but we're very close to a macro downtrend. We haven't been in a macro downtrend since it's been a couple of years. So the last major one you probably all remember happened right at the end of 2007, 2008. And our system actually pretty much nailed it. So, but if you're in a macro downtrend, you'd want to be less invested with larger cash positions, more defensive with buying more short-term in nature and shorter profit targets and tighter stops and hedging and so forth, so you can develop a plan. So what we use are 5 different time frames. Macro, we use the monthly. Long term, I use the weekly. Medium term, the daily. Intermediate term, the hourly. And the intermediate term is also what we use for our swing trades, that combined with the daily. And then short-term intraday, which is for our day trades, minutes and ticks. So what I'm going to show you now is the current trends of the market just based on our system. Now, you can use other systems, but this is using our system, so I'll show you how it's been able to help us. So this is a weekly chart of the S&P 500 cash, and so these bars, high-low close bars, are just a full week, and these arrows, these were put in by me to show exactly where our system actually had a cycle shift. So, and it's based on the close of this weekly bar. So this came back on October the 12th, and it's been in a long-term downtrend ever since. So if you'd been, using a system like this, you could have gotten out of your length, you could have gone to the sidelines, you could have gone to, do whatever, and you would not be into the aggravation pain of this down move. Or you could develop a plan to trade to the short side or hedge positions that you maybe wanted to keep with options or something. So it gives you a trading plan. Here you can see in June it went long. We were in an uptrend for about 5 months, and the system caught it totally long. Here was a downtrend, and nailed it pretty good. Here's another downtrend, neutral, and went long here on October 7th, back in 2011, had a pop-up, neutral, and long. So that's on a long term. Here's the medium-term time frame. We measure this by the daily, and you can see here we were short on the 7th of November right here. System went short, went neutral just yesterday. With this close, it's probably, based on this closing price today, it's probably short again. Here's the intermediate term trend. This is measured by the 60-minute time frame. We've had some great moves down, and then it got real choppy here, the last few days, and then we had another break lower here today and went short actually today at around 10 a.m. and had a bounced up and then closed on the lows. Here's just the NASDAQ 100, which we use a lot, and it went short back on the 5th of October, and it's still in a downtrend on the long term. We had a nice move to the upside here. This came in early July, had a nice trend up. Here's the NASDAQ 100 using the daily, and I put out every day, I put out a video newsletter, and this is based on the power cycle trading model, and it's just a wrap-up of the day, and it gives you a market outlook for the day and for any trend changes. So that's available too on my site if you're interested. That is $99 a month, but it's a great service because you get it every day, and it'll be based on this model. So here, we had a short back here on about that was on November the, let's see, that was November the 6th or 7th, went neutral, and then today on the close it's going to probably be short here. And here's the intermediate term time frame, the 60. You can nailed it today. This came today at actually came early, like at 5 in the morning, but it's strictly based on the model, and it's still holding short there. Here's Apple. See Apple here, weekly, turned over here, got into this on the 5th, just about exactly the same time as the NASDAQ rolled over, Apple rolled over, or vice versa, still holding a downtrend. You've got some good support. Well, this support level here, I don't know how, it's some pretty decent support, 528.66 basically. But if it breaks this level here, watch out. There's a lot of room to the downside, back down to 400. So be very careful if you're trading Apple. It could try to hold in here, but if it does power through here, watch out below. Here's Apple on the daily. Our last really good short signal was here on November the 7th. Let's see, that was October 25th, actually. And then cycled all the way down in this channel and went neutral yesterday. So it's still neutral right now, barely neutral, but neutral. And here's on the intermediate time frame. You can see this short was on the 7th and just nailed it big time. Took a long here, got sucked in on this last Friday, that rally up, and then just went neutral. Well, went nowhere, but got back out, went short here today, so flipped. So, if you have a system, it just helps you navigate the water. I mean, and then you have discretion with the system. And here's the trend line, pivot low, break. So that's in a nutshell of kind of what we're looking at. Now, here's, we trade a lot of, a couple of our traders love to trade gold. Will is one of them. And here, actually, Will today made like about $1,500 a contract cumulative trading gold. Today was a great day for gold. But this was on the October 24th. I just put this up. He made $160 here. And then Doug, this is just the interaction in the room. And he's saying, Will, can I just give you my money to let you trade? Will is a just unbelievable trader. I saw him one day on gold. He made over $7,000 a contract, and he trades a lot of contracts, so he's making a lot of money. And then he says, Will says, Doug, it's all Larry's indicators. Still watching gold, but wow, it's trading so slow now. And then just about an hour later, he made $400 long. And so he uses this same trading system. Here's that Doug guy. He's from Atlanta. On Google, he had just started trading, made 3 trades, 100, 30, and $20 per contract. He did that in 10 minutes, and he was very excited about that. Here's an older guy that we have that's a really astute person, and he's really into the indicators. He says, Larry, your methodology is most clear-cut and logical for me to understand, and it's so universally applicable across instruments. I could not be more satisfied. And he came back with another email later, says, I'm very pleased with the basket of indicators you have developed. I'm trading ES both regular trading hours and Globex. Couldn't be more pleased. So if you'd like to learn, and get results like some of these guys, I'm having a special. You can go in here. You get your choice of any of the Power Cycle trading courses. We have 3 main courses. They're all based on the same exact trading model. 2 are for day trading. One is kind of more for futures. One is for the stocks and options, and the other one is for swing trades. Now, the course retails at $797 on my site, and I'm also going to give in to this package, Option Trading Made Simple, which teaches you how to select your strike prices for options if you're interested in trading those, for outright options or spreads. And also you'll get, for 1 month, you'll get membership to that aftermarket report I told you about, and that's at $99, the retail, and the virtual trading room for a month, which is valued at $147. So this whole value totaled up as, $1,193, and I'm having a special right now. You can get it for $597, and get your choice of one of the Power Cycle courses. Here's the URL if you're interested, and I'll post it again for you there. So if you just go to that, it'll give you all the details of what you get. here's a little bit more of an overview of that. There's the Power Cycle Futures Day Trading course. This is geared towards futures, but the model's the same on all 3 courses. It's just different time intervals that we'll use for the different type of assets. It's a 137-page color manual, 13 videos. I think it's 14 now. I added another one just the other day, so I'm constantly updating things. Power Cycle Day Trading course, you get a choice of one of these. It's a 109-page manual, 20 videos. The videos are really instructive. Are the Power Cycle Trading course, which is more in line for longer-term swing trades, 64-page manual, 17 videos. You get option trading made simple, and then 1 free month access to the online interactive virtual trading. So it's a great package, and I'd love to work with you guys if you're interested. If you have any questions, please let me know. One thing I'm asked all the time is, no, you don't have to live in the U.S. I've got a lot of guys in Europe, the UK. I've got several members that have been with me a long time. I've got people in Austria, Australia, all over the place. So it's just a matter of your hours, if you can handle, the U.S. hours, but if you're in the UK, that's not a problem. So, and then the other thing I wanted to point out is that you get the free membership for a month, and then it's automatically billed unless you cancel. It's $147 a month for the trading room after your first month after this package. Now the model works on any of the platforms. It's a model of indicators. So I have TradeStation, NinjaTrader, and Thinkorswim. I've got a customized package that I've got set up for Thinkorswim. I've got one of my members is PhD in neuroscience and a computer programmer geek, and he's a fabulous trader as well. And we put together a great customized package for Thinkorswim if you have that, and that's kind of an add-on. But we're doing a lot of stuff, so it's a great way to get involved in trading. Very simple model once you understand it. And in the virtual trading room, I do just for the first from 8 in the morning Central till 10:30 Central. I'm in there teaching, and whatever trades I see, I call them out, and then I go through and coach and go through all the trades and review them, and then I'll pop in and out of the trading room throughout the day. So it's a great learning environment. I've got over 30 years experience, and this is a great trading model. So I hope you guys will come join us and visit us. If there are any other questions, please let me know. Or send me an email. I'll be happy to get your emails and tell you as much as I can there.
All right, great. Thank you, Larry. We appreciate you being with us this afternoon. That's some great information. Again, please be sure to visit Larry's website. Let me type in the link for you here. And you can also email him at this email address here. So anyway, thank you so much, Larry. We hope you all have a great afternoon. We will be posting a recording of this. Hopefully we'll get it up tomorrow morning pretty early so you can recap anything you might have missed. If that's it, if there are no more questions for Larry, we're going to sign off here. Thank you so much.
Thanks very much, everyone, and have a great evening.